Picture waking up to the headline, Nasdaq listed firm hunts for $500 million just to bag XRP. You'll get instant goosebumps, right? Well, stick around because by the end of this story, you're going to see why their shopping spree might rewire the corporate treasury playbook and maybe, just maybe, hints at where the next big crypto wave is heading. Now it might just shock you, but I am not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And today's video is for entertainment and educational purposes only. So there I am in my local coffee shop, FOMARK collapsing into a sugar whirlpool when the kind of push notification pops up. Trident Digital Tech Holdings plots $500 million XRP treasury. $500 million. Now the barista basically and literally stopped mid-pour because I blurt out their what loud enough to kind of startle the muffins. Now, we've kind of seen corporates stash Bitcoin before, but XRP at this scale on Nasdaq? Well, my inner geek is kind of sprinting laps at this point, and I pull out a napkin and sketch out some math, right? $500 million at today's price could scoop up roughly hundreds of millions of tokens. Now, that's not a kind of rainy day fund. That's a digital Fort Knox. And here is the kicker, right? Trident's not tapping the kind of couch cushions here. They're gearing up to raise fresh capital. That's equity deal, strategic checks, structured finance, wizardry, whatever it takes. And they're timing it for the second half of 2025, pending, of course, the usual regulatory green lights. What's the translation? Well, they want to pounce when the market's halfway through dessert, not the appetizer. Now, is it smart or is it risky? Hang tight. First, let's rewind, right? Corporate treasurers, they have kind of a dilemma that feels like choosing between lukewarm soup or a flat soda. Now, traditional cash, it bleeds purchasing power in an inflationary world. Bonds let you kind of watch paint dry, and foreign currencies kind of twist like a Rubik's Cube after 3 espressos. So enter digital assets. Now, Bitcoin, of course, grabbed the early spotlight, but XRP offers something unique: blazing settlement speed, minimal fees, and, thanks to on-chain escrow transparency, a predictable supply schedule. So it's no surprise that institutions are quietly eyeing it like hipsters eye limited edition sneakers. Now, Trident's CEO, that's Soon-Holt Lim, isn't just stacking coins for bragging rights. Now, he wants staking yield. Now, the XRPLs, the ecosystem partnerships, and the kind of whole enchilada. Now, you got to picture a modern treasury desk where idle cash doesn't snooze. It kind of earns, it builds apps, and greases global payments faster than you can say Swift who. Now, Lim calls it setting a new standard. I call it corporate FOMO with a suit and a tie. But Trident, it isn't alone on the dance floor. Here's a quick roll call then. We've got Webbers International, which is kind of jockeying for a $300 million XRP war chest funded by loans and credit lines. No dilution, just debt with digital muscle. Then you've got Vivo Power, who's scrounged $100 million from a private fund. And private round, I should say. That's enough to kind of swim laps on the Flare network for staking rewards before reinvesting. And Wells Logistics Health, well, they actually secured a $50 million credit line because apparently pharmaceuticals and fast settlements are the new peanut butter and jelly. So even kind of hyperscale data wants to funnel $10 million into XRP by year end to back their blockchain pivot. One by one, sectors that you never expect are plugging into the same ledger like kids discovering cheat codes. Now, let's address the elephant, or should I say the orca, in the room, and that is risk. Right, XRP's price history looks like a roller coaster designed by an adrenaline junkie. Now, regulatory kind of red tape, market mood swings, and the age-old question, but what if it tanks? They kind of keep CFOs up at night. Yet these companies are betting that the upside, that's faster payments, possible appreciation, staking returns, it actually outweighs the jitters. Now, it reminds me of that time that I tried to surf in Bali. It was a terrifying drop, an exhilarating ride, and yes, a face full of salt water. But once you catch the wave, you're kind of addicted. Now, speaking of waves, if you've ever tried, or at least tired of kind of tracking all of these Ripple kind of solo, then our free educational Discord server is literally just a click away in the description. Why don't you hop in, you can say hi, and you can share your hottest takes. There's no paywall there, just pure crypto nerdery at its finest. All right, so stats time. Now, according to recent filings, corporate treasury or crypto treasuries have actually ballooned past $60 billion globally. Now, Bitcoin still hogs the spotlight with roughly 3/4 of that pie, but altcoins are creeping up. Now, XRP's slice is tiny today, yet when a Nasdaq heavyweight kind of pre-orders $500 million worth, well, market perception flips faster than a pancake on a Sunday morning. So liquidity will deepen, slippage will shrink, and suddenly traders who once kind of scoffed at the banker's coin, start chart watching after midnight. And here's another metaphor for you. Let's think of XRP adoption like kind of building a campfire. At first, there's just sparks, right? An OTC desk transaction here, a remittance corridor there. Then someone tosses on some dry kindling, RippleNet partnerships, on-demand liquidity corridors. Now, Trident's $500 million is a kind of stack of oak logs landing with a thud. Now, those flames are going to leap, their shadows will dance, and everyone kind of scoots closer for some warmth. That's institutional investors, they hate missing the heat. But the plot here does thicken, right? Trident isn't flipping tokens for profit. They plan to stake it. On the XRPL, staking resembles locking your tokens, or at least your favorite kind of snacks in a vending machine, if you will, that kind of spits out more snacks every few weeks or so. Now, it's kind of passive income with cryptographic locks then, right? Combine yield with, potential price appreciation, and CFOs suddenly look like yield farming rocking spreadsheets instead of straw hats. So if Trident pulls, let's say, a conservative 6% annual yield on $500 million, that's $30 million before they've even factored in price moves. That is not pocket change. And yet, yield is not a free lunch. Validators, slashing risk, smart contract bugs, these things kind of lurk like seagulls eyeing your fries. And that is why Trident's courting top crypto organizations to actually, architect robust custody and risk management rails. It is hiring a Michelin star chef to basically watch the buffet table. So you can still eat, but you can trust the food won't poison the board. And because every good story needs a twist, let's zoom out to a macro level. Central banks worldwide, 38 at the last count, are piloting digital currencies. Cross-border friction is an unresolved riddle, and if CBDCs do launch, they'll need bridges. Now, the XRP Ledger's interledger protocol is tailor-made for that handshake. Suddenly, Trident's kind of treasury, it doesn't look just like a store of value. It could become the lubricant for instant global settlements, payroll, supplier invoices, the full corporate cash cycle. So imagine paying a Swiss supplier in seconds while sipping kind of CFO in Singapore. That's not sci-fi, it's testnet reality. Now, of course, regulators loom like storm clouds. Now, Trident's kind of rollout, it hinges on approvals. And we all remember 2023's spot ETF saga or the SEC skirmishes. But Nasdaq listing forces kind of transparency, quarterly reports, shareholder Q&As, and, certifications. Now, Lim kind of promised full transparency, music to analyst ears. If they pull it off, they'll offer an on-ramp blueprint for every publicly traded company still clutching dusty old T-bills. Okay, so let me pause and share a quick personal anecdote then, right? 3 years ago, I interviewed a CFO who laughed at the idea of crypto on balance sheets. He said, "Kid, the auditors would faint." You can fast forward to last quarter, the same guy emails me asking how to open a corporate wallet. Oh, the tide, it doesn't just turn, it kind of sneaks up and soaks your shoes while you're admiring the sunset. That is where we are right now. All right. Here's a bit of a reality check. Could all of this just blow up? And the answer is absolutely, right? Price dumps, hacks, policy U-turns, black swan bingo. But do early adopters risk big for outlier gains? History says yep. Now, Amazon survived the dot-com, implosion because Jeff Bezos, kept betting on the long game while others kind of hoarded fax machines. Now, Trident's move, it feels Amazon-esque. Bold, it's borderline crazy, but potentially visionary. And speaking of bold, if you're kind of hunting for an exchange that treats serious traders seriously, well, Blowfin is worth a look. Now, for full disclosure, the link that's in the description is an affiliate link that supports the channel and keeps my caffeine IV drip running. But it also gets you free discounts and sometimes some pretty juicy sign-up perks. It's kind of like a win-win. So just remember to read all of those terms. Okay, now let's hit the climax. Imagine Q4 2025. Trident completes the raise, wires funds and starts buying in kind of tranches, right? Markets will notice, liquidity pools will swell, analysts at big banks kind of circulate memos with subject lines like, is XRP the new corporate hedge? Meanwhile, of course, Webos finalizes its credit deal, Vivo Power stakes via Flare, and Webos Logistics Health kind of settles cross-border pharmaceutical payments in seconds flat. You kind of refresh coin market cap, XRP's volume has spiked by 200%, and crypto Twitter is melting faster than an ice cream on the Dubai sidewalk. Now, in that moment, when the skepticism flips to curiosity, that's the crack in the dam. And after that, it's the floodgates, and that's anyone's guess. Okay, so let's digest some key takeaways while my coffee goes cold. 1. We've got corporate treasurers that are evolving from bean counters to yield hunters. 2. We've got XRP's utility narrative, settlement speed, low fees, scalable ledger, and it has matured enough to kind of woo Nasdaq level suits. 3. We've got diversification, which isn't just a buzzword. It's actually turning balance sheets into crypto-powered Swiss Army knives. And 4. Early stories like Trident's might look insane until, well, they don't. Okay, so if you're still kind of curious, and your curiosity is maybe even doing backflips, jump into our free educational Discord server. There's a link in the description, right? The meme coins, of course, are optional, and the dad jokes are mandatory, right? We kind of break down the headlines like this in real time and occasionally even roast each other's TA charts. It's all for a good time. Now, as we kind of coast to the finish line here, let's remember why all of this matters. Finance right now is morphing from an analog era to a digital kind of velocity, right? Companies that adapt could actually ride the kind of slipstream. Those that kind of hesitate might actually end up sending faxes in a fiber optic world. Now, Trident is betting $500 million that XRP sits near the center of this new map. Whether you're kind of, or what I should say, whether they are right or spectacularly wrong, the experiment here will teach us all something in volume.